Welcome to Top 1% Module 3, the Estate Agent's Success Formula Training videos. Let's view what Module 3 has in store for us. We have been through Module 1, the Essential Knowledge Requirements, Module 2, the Essential Operational Requirements. Now Module 3, the Essential Tools that an estate agent needs in order to operate at the top 1%. Let's view the tools. In our previous models, we've discussed the budget and plan calculator, the mandate management system, which needs to be automated, the importance of the capital gains tax calculator, the rental yield navigator, and two other important little calculators, the loan amortization and bond and transfer cost calculator, which every estate agent needs to have on hand. Then, dependent of if you are focused on the commercial property, you would need a proper commercial valuation calculator. We are one of the few companies who do that correctly with the correct formula. Same with development property. There are only two formulas that will accurately calculate a development property and compare them with one another. And if you are focused in the sale of businesses, we have business valuation calculators with the correct formula. The nice to haves, so the area data sheets, which we've discussed with your pricing and yields in it, personal income tax calculator, which we have, and very new, shall I say, we are still to launch the agency manager, which will manage profitability of each and every single agent listing, etc. But let's show you the essential calculators which every estate agent requires in order to operate at the top 1% level. Now we have a basket of calculators. We call it the toolkit. Everything's automated. It's on sheet. We can have a look at the budget and planning calculator. We've discussed this at length in Module 2, wherein you would insert your budget. It automatically calculates the turnover requirements, in other words, the amount that you need to sell in order to meet your budget, etc. It will give you a choice of various percentage commissions which you achieve on your sales and show you the importance of holding commission, because it will automatically calculate dependent on the commissions you receive. Your tax directives are built in there. And very importantly, it will calculate your daily cost, your hourly expenses, your income generated per working day and per working hour. Now we have an exciting new feature coming on board with this calculator, is that if you employ and dedicate yourself to inserting the actual expenditure, we would automatically bring that into a personal tax calculator. So at the end of the year, you will not even have to perform any further duties regarding your income tax. It will get imported into our spreadsheets and automatically calculate your full taxation ready for submission. That's just a nice new feature on the budget and planning. Then we've had a look at the mandate manager, which you need to have. As discussed again in Module 2, it will calculate the number of days on the market till sold, the unsold, the average percentage of listing prices achieved, etc. Give you demographics of how quickly you are selling properties. You can categorize this again, separating apartments from houses and see where you are operating more efficiently, etc. The need for an automated mandate management system cannot be overstated. We have discussed the rental yield calculator, how quickly you can work out the yield for a potential client, or perform desktop valuations on rental property. If you have the suburbs average rental yield, you could calculate that very, very easily. Now, we'll take you through our next calculator, the loan amortization calculator. You can download these calculators for free anywhere. Some of the calculators you can't. But The loan amortization calculator in the basket of tools is quite an interesting topic, because when you're dealing with investors and taxation, etc., they need to understand, they need to know the interest portions so that they can compute their tax correctly, etc. So it's not just about calculating what the repayment is. You can look at different scenarios, different time periods, which suits the clientele as well. Transfer and bond cost calculator, this is the South African version. Again, it's a must-have. It's part of the toolkit which every estate agent should have on hand so that you can answer questions immediately. Capital gains tax, we covered that quite extensively in Module 1. If you have a capital gains tax calculator at hand which calculates personal income tax as well, then you will be setting yourself up undoubtedly in the top 1% of operators as a real estate agent. Then we take you to the more specific calculators. Now, you can quite honestly say that our commercial valuation calculators, business valuation development, are unparalleled. I will show you quickly in 40 seconds how we perform a detailed commercial property valuation. Let's assume a commercial property is generating 300,000 per month income. $300,000, and the monthly costs are, let's say, 35,000. The monthly maintenance provision, perhaps 5,000. The vacancy percentage, perhaps 5%. Envisaged cap rate, perhaps we start at 9%. Annual rental increment, 6.5. The funder's interest rate, 8%. Deposit value percentage that a client wishes to input, perhaps 40%. And the annual expected growth, we leave it a conservative 4%. At this point, you've completed the entire valuation process of any commercial property building, retail park, you name it, industrial park. What is critically important to investors, funders, and fund managers, etc., is the net present value of future cash flows, internal rate of return, modified internal rate of return, which is the most important formula of all, as well as the cash flows, the incremental incomes, your mortgage dependent on the financing charges and the financing amount that you've chosen. Now we complete these reports automatically, 5 to 20 years, and all that is required is 9 pieces of data to be input. We can quickly have a look at the development property valuation calculator. Now, most developers and analyzers get it wrong by comparing gross profits to one another to see which project to take on. We cannot disagree with them more. It's all about the timing of cash flows, and there are only 2 formulas that can correctly calculate net present value and internal rate of return on development projects or projects that have irregular cash flows, and they are XNPV and XIRR are the only 2 formulas that can take in consideration varying amounts at varying dates. So this is an incredible, incredibly valuable calculator. It will also calculate the commercial value if they are holding stock in the development itself. Business valuation calculator, it's used all over as well. You only input certain balance sheet data which you'll get from the auditors or from the balance sheet itself, and it will automatically calculate all the correct formula, the net present values, etc. Let's have a look at a sheet. It's a 3-year report. It will calculate the internal rate of return, modified internal rate of return, the cash flows depending on the finances, financing arrangements which you've chosen, and that is all in the input fields, easy to manage, easy to input, and everything is done for you. So we have this basket tools. We've got the commercial valuation calculator, development and business valuation. We have that also on app, suitable for cell phone and iPads. Unfortunately, these other standard calculators are Excel, suitable for laptop and desktop, and we will have them in app form in a couple of months. I thank you for watching our video on the toolkit requirements. And remember, if you want to operate in the top 1%, you cannot change a car tire with a tablespoon. You need the correct tools to operate at the very, very top. That was our Module 3, the toolkit requirements for top estate agents. Module 4, we will hope to see you there, and we will focus on correct market valuations for residential properties. I certainly hope you have enjoyed, and I hope to see you at Module 4.